Wine. Now that I have your attention, I want to welcome you to our podcast and introduce you to this episode's sponsor, Vinovest. You may know that I grew up on a vineyard, so I was very happy when Vinovest approached us with the cooperation. They enable you to invest in fine wine. You can do this to diversify your portfolio, or simply to get to know great wines, since you can get your wine also delivered home to enjoy it. Or you can do both. To learn more, use the link in the description below.
Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany, as well as the founder of the world's first internet radio station dedicated to startups and tech companies, Startup.radio. Today, I'd like to welcome Henrik. Hey, how you doing?
Hey, Joe. I'm doing well. First of all, thanks for having me here. Very happy to be part of the podcast.
Yeah, totally my pleasure. Let us tell our audience a little bit about you, and then we can get into the interview. First of all, they may recognize the pale gray background. You are calling in from a phone booth in Berlin because your company is physically located in Berlin, but officially headquartered in a little town out on the outskirts of Berlin called Potsdam. And what are you guys doing with FINOA is you are in the process of building Germany's first crypto bank. Is that right?
Well, yes, you can certainly call it a crypto bank. In crypto, the terminology bank is probably not always the most commonly used. But if you, let's say, compare to traditional use cases, yes, we provide financial services for crypto for our institutional customer base, and that out of a regulated environment. So yes, it's a crypto bank focused on B2B clients.
Don't worry, we are not necessarily 100% crypto podcast here, so we can say a crypto bank and you won't get beaten up for it. What I found interesting, going a little bit in your CV, you've been actually Fulbright scholar attending Golden Gate universities. And as the name already suggests, I do believe it's somewhere pretty close to the Golden Gate Bridge, right?
Yes, it is. It was in the heart, or it is in the heart of San Francisco, in downtown. It's pretty, not known in Europe, I would say, but they have a great relationship with Fulbright, the scholarship that I was happy to receive. My dream was to study in San Francisco, and then in 2013, I got the chance to do my master's degree in downtown San Francisco. Definitely one of the best years in my career so far.
Great. And you also did an MBA. What I found pretty interesting about you, you've been a trainee at Siemens. Yeah, the big company that does almost everything, I would say. And then Gigaset, was it actually like the handheld phone devices there within Siemens?
That is true. There used to be a part of Siemens still when I joined. So I applied for Siemens back in the day. In Germany, it's kind of a common concept that you have sponsored bachelor degrees. So corporates pay for your studies. Basically, you give up a lot of freedom because you not really have any student life, but at least you have a bit of money in the pocket. That's what I opted in for. And then while I was there, they sold that handheld devices, so literally the pre-mobile phone kind of era, and they carved it out as Gigaset. And anyway, what I learned doing that doing that bachelor degree, is that I wasn't really ready to work for a corporate player just yet. That's why I just headed off after graduating, and then went to San Francisco to continue my studies.
Very nice. The two typical questions associated with San Francisco, maybe three. Did you visit the headquarters of one of the popular tech firms there? Did you see Great White, and did you experience an earthquake?
I think I can say yes to most of it. So the earthquake I did actually feel very small, but for German standards, that was already a life-changing event. I would almost say there's no such, or not really such thing in Germany. And obviously, I was falling in love with the tech scene there. It's like I was going from Twitter to Google to Uber. I had friends working in the different tech players, and in 2013 most of them were not as big as Google was, but Twitter, Uber, they weren't as big as they are now. And I was really stoked. I was getting into interviews and was really thinking, hey, I'm going to stay in San Francisco, we're going to work in tech here. Then to figure that my Fulbright scholarship, which I was so happy to have, wouldn't allow me to get a work visa afterwards. They would send me at least 2 years back to my home country to bring the American culture back to Germany. And then this plan to stay in San Francisco kind of collapsed. And that's when I decided to go back to Germany then.
Mm-hmm, mm-hmm, mm-hmm. That sounds pretty promising. And then you ended up as a consultant with McKinsey. You told in other German podcasts you've been working a lot with financial service institutions. And then at one point, after a little bit more than 4 years, you decide to jump ship and start a startup. Can you take us through this journey here?
Yeah, no, happy to. So I started in McKinsey, what was it, 2015? Still think it's a great school. It's a great place to learn very bright individuals to work with, very international as well. But I somehow knew from the beginning that I wouldn't want to, let's say, make partner in a consulting firm. I just had different plans, and I never really knew in the beginning, what that was. If I just wanted to jump back into, let's say, the industry, into tech industry or whatsoever, or if I want to do something on my own. I always had this feeling that there could be something in entrepreneurship that really excites me. And I luckily got the chance with McKinsey to do an MBA. So I could kind of get out of the hamster wheel of consulting, had a year in beautiful Madrid in Spain to focus on what I want to do next while getting the MBA. And I was getting into crypto just before I went into the MBA. So I started investing into Bitcoin. That was 2016, the first time, and playing around with the technology. And then during the MBA, I was thinking, well, there's so much potential. The technology is so interesting. There's so much potential disruption in the financial industry. So basically for the clients that I was serving at McKinsey as a consultant. And then together with my now co-founder, Chris, who I knew from McKinsey and who also ended up doing his MBA in Madrid. And we ended up living in the same apartment. And on our kitchen table, we started ideating, well, what's next? What's coming after the MBA? And that was basically the first brick that we laid down back in the day of what is now FINOA 3 years later.
And how did you come up with this idea? I mean, it's you incorporated sometime in April, May 2019, and you then in 2021 raised 22 million in a Series A, which already for Germany is quite big. How was your way from, let's do something in crypto to really raising big money?
Well, yeah, that's actually a longer story, right? I mean,
don't worry, guys out there. If you're listening right now, get a snack, press pause,
exactly,
and we'll be back with you.
Have a coffee. I'm getting started. So no, but I mean, as I said, my co-founder and I, we were both getting into crypto. We were both ready to jump ship from consulting, and we were really thinking, okay, crypto is so interesting, so much potential, great technology, but what does it really take to become a mainstream market? And especially 2017, when we started ideating, crypto was very niche. It was very retail driven. It was a lot of providers which had arbitrary jurisdictions that they were operating in. So you would find companies in Malta, in Gibraltar, in the Seychelles, offshore, and very little projects at the end that were based, for example, in the European Union or based in our home country, Germany. And we said, well, if we believe that this is really going to go mainstream, it needs also to have teams and companies based in those, let's say, more, stable, more established also maybe regulatorily a bit more strict environments, even though crypto wasn't regulated back in the day. But what we always thought is it's going to come. Like regulators are going to put regulation under supervision. And if they do that, we want to be part of it, because I think that was really what we believe the lever or the trigger for global adoption and for really mainstream adoption. Out of the own experience that we had when we were investing into crypto as a private individual, it just never felt really secure. It was always like some shady platforms that we were using. I needed to manage, I remember 13, 14 different exchanges, wallets, platforms to kind of build my own portfolio. And that was just me with a few $100. And then I was thinking, well, my clients at McKinsey, the institutional investors, etc., if they were to start investing in crypto, they would have no partner to do that with. They just wouldn't have a regulated counterparty anywhere. You wouldn't find anyone in the European Union, and there wouldn't be that service that kind of combines their needs. And that's when we decided then to really build a service, a financial service, and the technology to serve institutional investors who want to go into crypto and help them grow their crypto portfolio. And 3 years fast forward, that is exactly what we are focusing on, exactly what we are serving. And that gives you a bit of the background and the backstory, how we started and why we thought it was the right, let's say, target market to focus on. Then when you look a bit back in crypto, and for those who are not in crypto, you just look at the, let's say, global market capitalization, you can see that end of 2017, the market reached an all-time high back in the day. And then in 2018, it really dropped into the so-called, or what we call now, the crypto winter. And that was exactly the time when we thought about raising funds from venture capital. And we had a really hard time convincing institutional investors, that was 2018, 2019, to convince them to invest into a crypto startup, because, crypto was kind of seen as not so much of a buzz industry anymore, a bit cold, not a really hot topic. And it took us almost a year to raise our seed funding round. And anyway, we kept on building, we kept on believing that the market is going to come. We built our product. And then what we saw in 2020 was that crypto really started picking up again, right? The crypto winter was certainly over. We saw massive market entrance, new use cases, and the overall market capitalization really increasing. And we were ready with a product. We could start serving customers. And that then basically, after a great year, 2020, led to our Series A funding round, which we then announced in Q1 this year, where we were then lucky enough to, for German standards, that's completely right, to raise quite a substantial Series A. I mean, by now, Series A funding rounds become bigger and bigger in venture capital funding. But back in the day, we were really stoked to be able to raise this with FINOA, with the team and the company. And that gives you now a bit of the story where we started and how we ended up with our Series A fundraise.
Mm-hmm. Talking a little bit about more FINOA here. What I took from, I listened to some of the interviews you did there. First point, you don't get 22 million just for promises. I heard in one of the interviews that you're already doing millions in monthly revenues.
Yeah, that's correct. Yes.
Uh-huh. And I heard that, of course, you have the crypto holdings of institutional investors. So you're not dealing with private clients. Are private individuals really able to get an account with you? Or do you say, no way?
We don't rule it out. So we do have private individuals who decide that FINOA is the right product, the right service for them, which, as our product is actually focused on, let's say, larger holdings, institutional investors are obviously then private individuals who hold a substantial amount of crypto assets, and they come to us and work with us as well. It's not our target market, but we also don't turn them down. We do have a certain, let's say, minimum threshold where we say, hey, this is customers where it makes sense with our service offering to help them grow and safeguard their crypto. But the actual target market is really the institutionals.
What is the threshold you're talking about there?
It's currently around 100,000 euros in crypto assets.
Oh, it's not like in private banking. You're welcome if you bring more than $5 million in investable assets. Okay, I see.
No, not quite like that. Yeah.
You spilled a few names when you've been talking in another interview. At the time, you said you had 280 customers. I think it's fair to assume that there are now over 400.
Yeah, I think that's kind of the target range we are approaching now. Absolutely right. And I mean, over the last years, especially with the institutional adoption that really picked up over the years 2020, 21, and 21 with a fantastic year in crypto in general. That obviously also played into our use case, into our target market, where more and more institutionals, which are not only, let's say, the crypto natives, but also coming from a more traditional background, starting to diversify their investment portfolio with crypto, with a certain allocation.
Mm-hmm. You also told in another interview that you are holding the crypto assets of Rocket Internet, for example. Any other famous clients you can talk about?
I mean, it's somehow, you call it banking, right? And in banking,
there's banking secrecy,
obviously client privilege. No, but we have a few clients where we openly talk about. I mean, another let's say more traditional, or from a traditional background is T-Systems. It's a subsidiary of Deutsche Telekom, where we have a great relationship with. They build infrastructure in crypto. They are paid by networks in crypto, and they need to hold their treasury in crypto, and that's what they do with us. Then, I mean, we have a full range of customers across the globe. Not very, let's say, only German focus. I mean, German is clearly our home market, but we have a very healthy client base also in the US, with US venture capital funds that invest in crypto, hedge funds that invest in crypto, and I like to say we have clients from San Francisco to Hong Kong, so basically across the globe. While obviously our target market is Europe and the European Union.
Mm-hmm, mm-hmm. I see. You said there you have many clients from abroad, including Asia and Silicon Valley, and you also said it's fair to assume that you're one of the global top 5 players in crypto custody.
I think that's with the focus on the institutional context. That's absolutely fair to say. And I mean, what we really we see in our vision as well is that we want to own the European continent, right? We want to be the number one crypto player here out of Europe when it comes to serving the institutionals going into crypto. So they should know there shouldn't be a way around working with our platform when crypto comes on the agenda for institutionals and institutions, corporates in general. And then obviously you have the global context, as I said, where we have a very healthy client base and a healthily growing client base internationally, and that's where we definitely want to maintain our, let's say, top 5 positioning. Yes.
Mm-hmm. You're regulated under the German law as a so-called crypto custodian. We may take a step back for everybody who's not from financial services. A custodian used to be somebody with like a big vault, like a huge door, and they kept the paper-based securities, shares, bonds in there. But you're doing this for the clients. Basically, you keep a lot of different wallets, I would assume, for different clients, and they can press a button and then they exactly know how much it's worth and how much crypto they have in their account with you.
Yes, that's correct. So, I mean, it's not so easy to compare the traditional custodians with the ones that we are finding in crypto. It's just it's a completely different tech stack. So it's while the traditional world is still to some degree paper based, right, and it's still to some degree physical assets that are stored somewhere. It's obviously all digital in crypto, and some, let's say, roles in the traditional financial system which are somewhat separated. You have so-called custodians, then you have global custodians, and you have central depositories, without going too much into that detail. That is a bit more, let's say, within one player in crypto, with the crypto custodian in our case. But as you completely correctly say, is that our clients, they store their assets with us. We hold the wallet for them. We maintain the entire security infrastructure around it. We maintain the, let's say, regulatory framework and compliance around it. And if our customers want to see their assets, they log into our interface, and if they want to work with their assets, grow their assets, they can do that through our interface as well. And that I think gives you a bit of the background how the client product interaction looks like.
Mm-hmm. Talking about clients, is there really a Me Too movement? Did you see any effects when Tesla, for example, said, okay, we are taking crypto and we are investing in crypto?
I would definitely say so. I mean, the conversations that kind of started to come in, and also the inbound leads with regard to treasury use cases. So that company said, okay, I have a certain liquidity on my balance sheet. I face more and more inflation, and I think that's even more true now than it was 6 months ago. I'm facing negative interest rates on substantial euro or US dollar holdings. I want to diversify. I want to kind of hedge my portfolio, and I think crypto is a new asset class where I can do that with, right? So, and I do very much believe that this kind of Tesla news, which just made it into any outlet that I can even think of, I think it made it even in the yellow press, right? So, it definitely helped to kind of give the market another push. But I think what's important to note is that, yes, it's great that Tesla kind of took this lead, and Elon Musk did his fair share there also in promoting it. But important is really to see that there was, let's say, a broader wave, and there is still a broader wave of adoption to crypto as an asset class, as an alternative asset in a portfolio. And that's really what also makes me very, very positive about the next years to come, because still the global institutional or the percentage of global institutional wealth that is deployed in crypto is still relatively low, right? So the potential that we still see, the opportunity that we still see, and that what we also want to grow with as FINOA is still tremendous. We were just at the very, very beginning of this kind of industry and of this movement, of this disruption in financial services, with crypto and decentralized finance kind of as the buzzwords here. And we're very happy to be part of that wave.
Mm-hmm. You're talking about just the start. So there's always a big competition at the beginning, and then you start to see at one point some winners. I do believe that there are other guys around. For example, we had interviews in the past with Cashlink. They now have applied for crypto custody license. There's Coinbase around, of course, the elephant in the room, as well as the more traditional players. What comes to mind, for example, are the global custodians like Bank of New York Mellon or State Street. And most people won't realize this, but if they do have a big portfolio of equities, especially US-based equities, there's a high probability that they already have assets with companies like that because they're so big. Do you see first a competition from traditional players, and do you see it getting fiercer in the future?
Well, I mean, in general, it's not a blue ocean. Obviously, like we are not the only ones working in crypto, and I think I personally see that as a very healthy sign that the industry is maturing. The market becomes also more competitive. There's more products in the market, more services in the market. But at the same time, what we see is, and some of the examples that you named, is that you also have to differentiate a bit the products, the services, kind of the target market that the different players going after. Is it retail? Is it more the institutional angle? Is it actual crypto assets? So let's say decentralized, for example, cryptocurrencies or utility tokens, or is it more tokenized traditional assets, like basically traditional securities or debt on new rails, so on a new technology stack, which, for example, Cashlink is very active in, which we also know very well here from the German ecosystem. So that is an important differentiation, of course, in terms of product offering. The traditional players in general, I've been hearing that for basically since we started, since 2017. I've been told, but do you guys actually have any legitimacy, because the traditional players will capture it? And I haven't seen that since, right? So I'm not saying that traditional players will not play an important role as well and serve a very important, let's say, piece of the overall pie. But I think also there we will see a bit of a new shift, because if you call it the elephant in the room, but if you look at Coinbase, it's a beautiful example, right? It's kind of also our North Star in our industry. They, with their IPO, they made it basically among the top 5 US financial service providers, or US banks in terms of market capitalization. For example, if I put myself into the position of a customer in the US of Coinbase, then even if Bank of America would tomorrow come with a Bitcoin wallet, I think there's very little reason to move from Coinbase to Bank of America, right? Because most definitely the service is going to be more expensive, and I don't think that the product will be much better, right? So that's exactly also why we as FINOA here in the European context very much see our chance to really grow into this market, become so big also as a service provider with such a large customer base and with such a large service offering that even if traditional players decide to go into the market, that we still have our fair share of the market and be the market leader in the institutional context. And I think with great products, great technology, and then having the same regulatory framework on top of that, so that certainty also for the customer, yes, that's also a fully regulated company, but it's completely native in crypto. To then be also convincing enough that our customers would stick with us and would keep on coming and work with us.
Mm-hmm. You talked about like security tokens, which we may add for everybody who's not a regular follower of this channel is possible in Germany. There has been an update in securities law, and basically you can now issue securities on tokens. And actually our interview guest, Bitbond, which we'll link down here in the show notes, made the first security token offering. And if you'd like to learn more about the background of the securities token law, we have an interview with Professor Philipp Sandner talking about the law before it even became a law. So with us, you guys are ahead of the curve. Talking a little bit more about the future of you guys right now. What are your plans? Because my understanding is right now you want to be the leader in Europe. You are not only doing like the classical crypto assets. I think you could also store NFTs with you, like security tokens, like utility tokens and cryptocurrency. So is there a broader range you can do? And what's your final goal? Like number 1 globally, top 5 globally, number 1 in Europe is what I've heard.
That's a very good question. So, as of today, if you ask, probably in the market, we are perceived as a crypto custodian, right? I think in a few years from now that will have changed a bit, because we started obviously with custody as our core product, but we are now gradually expanding the product portfolio. Like we started with a product which is very crypto, let's say, native. It's called staking. It's basically a chance for investors to grow their assets, to create additional yield on their assets. And we are now further expanding into brokerage. And if you look at our roadmap, you will see that lending is a very interesting use case that we will see in the future. Trading in general is a very interesting use case that we are working on. And what we really see ourselves is really this, I think, one-stop shop for institutionals where they find, when they want to go into crypto, where they find out of a secure infrastructure. So this custody piece will always be, let's say, the foundation of our service, but it will then serve for different use cases in crypto that you can access through our platform. And they should find their chance to grow their portfolio, to top up their portfolio, to also divest their portfolio to create yield in the decentralized environment, and all that. For all that, FINOA will be the interface to the institutionals, to the corporates who are looking for their crypto play. And that's very much what we are currently focusing on to grow the company into that direction, to move from a, let's say, single or two-product company into a multi-product company. And that's exactly what our roadmap at the moment looks like.
I see. It sounded pretty much like there's right now a competition of neo brokers going on that we track pretty close, especially in our news. Bitpanda, N26, of course, Coinbase, but also Scalable Capital come to mind, but they're coming from a different angle, always into retail, and you're trying to do a similar thing, a little more for the institutional and the high net worth individual side, from my understanding.
Yes, that's absolutely correct. So we really do not go into this in more retail and, let's say, low volume, low investment average landscape, but actually focus on the larger investors who really start deploying significant amounts, so up to 7, 8, 9-digit amounts or beyond in crypto. That's really what we build the product for, and what we target our services and the entire, let's say, customer service operations for, to really tailor our products to that customer group. And the neo brokers, for example, who then, let's say, enrich their offering with crypto in their trading engine or whatsoever, they could rather be a partner to work with, where we in the backend serve as the let's say B2B partner to safeguard the assets and to enable further use cases, while the actual, let's say, retail business sticks with the neo brokers.
If you wouldn't have said the last sentences, I would have asked if there's one of the neo broker clients you could talk about.
That's, as I said earlier, we have very few customers that we talk about, and then there's a lot which we don't.
Okay, just a few small questions to wrap it all up. Basically, when you applied for the license, there was a legal framework for it, and the German oversight body of financial services. What do you have? The FTC in the US, the SEC is in Germany BaFin. And basically, when you went there and applied for a crypto license, they did not say, "Oh, what's that?" but they knew what to expect. Did you feel this, like, in working with the regulatory bodies? That's a new business, and they do not want to completely stamp it out, but encourage it?
Yes, I think in general we can say that the relationship with the regulator in Germany around crypto is very positive. I mean, what you could see obviously as well is that over the last years, I mean, the crypto asset custody license in Germany was introduced in the German Banking Act by the beginning of 2020, so it's around 2 years old now. And what you could see as well over the time, that obviously the regulator understood much better how crypto and the ecosystem operates, how it works, what the different business model look like, what the value chain look like, what different, let's say, tech and product plays look like. And you could see that also time over time in the conversations that there was this, let's say, learning curve between the industry and then the regulator. And in general, I think we can be very happy in Germany that the BaFin took this early approach to, at the end, regulate crypto, because that opened a lot of conversations with investors, for example, who need to, or who are forced to work with regulated counterparties. So for us, that really was very important, and it opened a lot of doors that may have been closed before. That being said, I mean, it's always the same, right? That also with an industry that is so fast evolving, and I like to say that, you know, Fintech is fast, but crypto is warp speed, right? It's really even working in the industry. It's to keep up with the market, which is 365 days, 24 hours, right? The market is always open, and to keep up with the innovation that is happening already takes quite an effort. And then just put yourself also into the shoes of a regulator, right? Which has to kind of who's trying to put some guidelines, some sandboxes around certain business cases, but then those business cases are already evolving further and further. So what we really see also as our to do here, and I think I speak for the entire industry, is to really keep the conversation going, to exchange what we see is happening. And up to today, I can really say that both the regulator as well as the lawmaker, so for example, the German Financial Ministry, they really show the interest to understand, to help, and at the end also create this new labor market at the end, because here in Berlin we have a very strong crypto scene by now with a lot of larger players as well, which at the end create jobs, create taxes, and I think that's really something what we should focus on, that this continues in a healthy relationship.
Mm-hmm. Also, it provides a unique talent pool that would pull in additional companies as well. Talking about German Vollkasko-Mentalität, meaning full insured mentality. You provide insurance for the digital assets?
Well, it's a yes or no. And what is not the case is that crypto assets do not classify under, for example, as a German cash account, where you have this, at least for private individuals, where you have this 100,000 euro guarantee, basically from the banking association and the state at the end. That protects the assets that are in the bank accounts, but we don't have that same let's say logic for crypto assets. They're just treated in a different way. But obviously, we as an industry, we work on our own setup, our private insurance models as well. But that being said, what you can see is that, insurance in general works with statistics and history, right? And crypto is such a new market that we just don't see, let's say, a mature insurance market just yet. While we see a lot of, let's say, new products and services from insurance coming into the market, it's still quite a way for them to fully, let's say, cover the market, cover all the different use cases. Because custody is one thing, but then you have staking, then you have decentralized lending, and all those come with their own risks that both the users, but then also the service providers as ourselves undergo, and then obviously where insurance is demanded for. And there we definitely still see a bit of a, let's say, a creation phase and then sort of an infant state of the use cases that we see in the market and the insurance policies that are available from the insurance providers. But again, that's also one of our big to-dos that we work with the insurance market to provide the service coverage accordingly.
Mm-hmm. Another question, basically, when you've already said, so there's services you do not provide, but you will provide in the future. I would be a little bit curious when I talk to Tangany, a company that offers crypto software. I was asking, how high is your level of paranoia there? And I got the completely expected answers on the highest possible level. I assume you're the same. Do you have any additional safeguards in place, like internal controls other people would have not? For example, you talked about like 24/7 trading, like in Forex. I know a few Forex traders, they have alarm sets, and basically when your US dollar cross rates drop under a certain amount, even 2 a.m. Sunday morning, they got woken up. You as well?
Well, I think paranoia is a very nice concept. I think who's not in paranoia, who works in crypto, I think then something's wrong. Obviously, we at the end what we do is we provide security, right? Security on the assets that are stored and managed with our platform. And that in return means that customers are trusting us. So whatever we do, we have to reconfirm the customer in the trust that he puts into our products and our services, into our company, and that we can only create by being paranoia on our side, right? So obviously we have 24/7 a team on the ground that is observing our platform, that is observing the market as well. That's just how it is in crypto. It's a market that just never stops. And as I said, we also have customers from across the globe. So it's not that it's German business hours 9 to 4 and then the market closes. That is just not existent for us either. It's a very different business model as in traditional finance. Back to this, the security concept. So it's absolutely crucial in crypto because it's a decentralized market. So any transaction that is not intended by our customers needs to be prohibited. So we take a lot of care about authenticating the customer actions, authenticating the usage of our platform. And that's what our entire business is at the end built around. And that's not only the technology, but also the processes, the organization that we build, the people that we hire, that we need to trust in. That's I think paranoia really puts it very nicely.
I see. A slight level of paranoia is always pretty good working in crypto. Actually, I don't want to bother you anymore. There would be like a zillion additional things I would like to ask you, but I do assume that will come around when we do an interview when there's a Series B. Are you actually in the process of fundraising one?
Well, it's a good question always, right? Like I get that so many times, but in general, we have built a healthy business. We have raised a very healthy Series A last year, as we talked earlier about. We have also started generating very healthy revenues since a year and a half or so. And with that, we are not, let's say, actively looking at the moment, but then as it is, the environment might change, and also when you find the right partner to work with, and that is really convincing in our further growth story and internationalization, then we will see. But let's say no concrete plans as of today.
So that means if an investor hears this, it's time to reach out now.
That's what you said.
That's what I said. Henrik, we're now recording for almost 45 minutes. We will narrow this down a little bit in order to make it digestible on an average commute for our listeners. I would like to thank you very much. Hope to have you back when you raise the Series B sometime in the future, or when you get a different license or something. I'm sure there will be a trigger for another interview. Until then, I wish you best of luck. It was a pleasure having you here.
Joe, it's been a very nice conversation. Thanks for the invitation, and talk soon, hopefully.
Sure. Thanks, man. Bye-bye.
Bye.
That's all, folks. Find more news, streams, events, and interviews at www.Startuprad.io. Remember, sharing is caring.
Thank you for staying with us to the end. We would like to thank the sponsor of this episode, Vinovest. They enable you with a global network, master sommeliers, and quantitative models to find and invest in the best wine. You can decide what to do with every single bottle, which also includes getting them delivered home to enjoy it with friends and family. To learn more, just click the link in the description below.